Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, folks, I'm going to do my best to have a video every day this week. I may not be doing a full live stream on Wednesday. I will let you know as we get closer to that time. Let's go ahead and get into today's video. There's a lot to look at this week. We have a ton of earnings coming out. We have approximately 445 earnings reports, but there's some major stuff coming out. On Wednesday in particular, we have Apple and Tesla, Facebook, and many, many more of the big players. We also have stuff coming out on every day that is going to be significant from the standpoint of the earnings that are coming out. This is about the only thing I can see right now that is going to be able to drive these markets forward. If the earnings can't do it, we're going to be in somewhat of trouble as we're starting to see some of the elements come out of the new administration, which is bringing up more questions than answers, at least for the moment. Also this week, we've got the Fed. So as we expected, we did see Janet Yellen basically get through part of her confirmation, and the fairy godmother will be in place and be ready to spend as much money as she can. She said we have to spend and spend big. We're going to have the Fed meeting, and that's going to back up a lot of what we're expecting to see. The economy is stalling here. This is becoming more of an effort, in my opinion, as far as the Fed goes, to continue to pump some money into the markets. But now they've got Yellen to come in there and spend the money once they create it. So it's going to get very interesting. So Wednesday's Fed meeting is going to be very significant. As far as the rest of the week goes, though, the only other thing that's coming out is on Thursday is the claims and the continuing claims. We did see a downtick in the continuing claims right at 5 million. We'll see if we can get that under 5 million. I'm not sure that's as significant as I have talked about in the past. There was a time if we would have printed under 5 million, it would have mattered, but that was about 6-8 weeks ago. As we go forward, we're starting to see some deterioration in that number, but for all the wrong reasons, as people are stopping looking for jobs, which is the wrong metric that we want to see in this environment. As we go forward, the markets are going to be watching very closely on the economic side and seeing if they get any type of rhetoric around the new administration, especially Janet Yellen and the Fed teaming up together. So we'll see how this all plays out as the week goes on, but expect to see lots of churning yet. I don't believe that the markets have solidified what's exactly going on yet, because no one really knows. There was a lot of confusion, in my opinion, last week of what was coming out of the new administration, as they were just doing one executive order after another, canceling jobs and other things. So there's going to be a lot of energy jobs starting to be affected. So we'll see how that all plays out with the Keystone getting shut down, and there's some other elements out there as well that are starting to look a little bit negative, which could push the economy a little further in the wrong direction. So we'll have to watch all of this very closely. Let's go through the technicals and see what they're telling us about what we're going to see this week. As I begin the review of the WaveTech Database, we're continuing to see some rotation here. There were about 900 new sell signals with only 275 buy signals. So there's still a negative rotation going on. We're back down to 70.96. So the database is still robust. But as I look down at the sectors below, you're going to notice that about 8 of the 10 sectors that are long are getting long in the tooth. Otherwise, they've even exceeded or are at their typical holding period. So we're starting to see from an individual sector viewpoint, we're starting to see things get a little long in the tooth. As far as the individual symbols go, we're still in a pretty neutral, actually positive phase. Right now, our average days long current duration is 24, and this is important to understand because we're getting closer to that number being extended as well. So we're probably another week, maybe 10 days, and this number is going to be fulfilled substantially. So now we're at 60% of the duration fulfilled. As we look at the current average profit of 10%, the percent fulfilled is at 91%. So the database on a short-term basis is getting long in the tooth. Now, we just had a Friday report, and we look at the weekly statistics. We actually moved up to 80.95, so we saw a slight increase in the numbers on the weekly database. And this is positive, but it is also somewhat extended here from the viewpoint of getting a high level of bullish percent, which is now at 81%. But as we look at the optimize right now, our current duration, we're only about 35% of the way through the longer term cycles in this database. So there's still a lot to look forward. So we're not ready to roll over an intermediate database, but the short-term database is suggesting there is some issues coming in there. S&P futures, we're starting to see a little bit of dissipation of the short-term upward momentum where ppm1 is at 0.07, ppm2 is at 0.21, ppm3 0.14. One of the things I talked about going back to last week was this 10-period moving average, and it's been in play. There's only been one session in the last 15 sessions that we've actually closed below that number. Now, it is still somewhat vulnerable. That number is 38.10 right now, so there is some vulnerability for us to close below that number. If we saw that, then we would move back toward the 21-period moving average, possibility of going down to the extreme, which would be the 40-period moving average at 37.21. Now, this is the futures. If we look at the weekly patterns, this is still a strong pattern. We're looking at ppm1 of 0.81, ppm2 0.60, and ppm3 0.78. So these are very robust trends. We're seeing those trends turn up slightly. So this is a bullish pattern that is still out there on an intermediate basis, which lines up with the analysis as we look at the WaveTech intermediate signals. This is very much in sync with what's going on the intermediate level. Now, the key level, which 10-week moving average 37.38, is going to be the number that we're going to be watching this week. But as we look at the SPX for this week, we're seeing that the market grid suggests that a minimum move 38.66, 38.94. Well, I mentioned in the commentary that the market is stalling here. That is just telling you that the momentum is starting to slow down. It's very obvious in the weekly as well. So we're seeing some robust numbers yet. So we're still in trend mode on the weekly, but we're not in that mode of where this thing's ready to roll over just yet. When we look at the daily, we can see that the daily had a couple things happen. We're getting a number of cycle clusters to come in. We had yet another one come in when we got the RXT sell a couple of sessions ago. And so we've had 2 days sideways. Right now, overnight, we're seeing some strength in the futures. We're seeing them up about 12.5 handles. So they're trying to maintain above that 10-period moving average. On the cash, it's 38.14. But there is some definite potential if we can't get above the highs that we printed at 38.61 in the next 2 sessions. We could see the S&P decline back into these moving averages. Next market I'll cover is the NASDAQ. It is still stalling here, even though we're up about 0.5% overnight. The market grid is still contracting in a very narrow range. We're not seeing a huge expansion in the short-term momentum, but it is still positive, 0.26, 0.27, and 0.26. Those are all trend modes, suggesting that we're still locked in that upward trend. And the key number here is going to be the 13,093, which is the 10-period moving average. As we look at the weekly chart, as we look at the market grid, we're not close to R1 yet, which is 13,494. So far, we've had a high of 13,442. So we're going to be watching R1. If we get through that level, then the next resistance point will be R2 at 13,643. On the downside, we're looking at the potential of an S2, which would be 13,079. So for this week, I'm looking for S1, R2 for the week. Next market that I'll cover is the Russell. The Russell saw some relative weakness versus the NASDAQ for a couple sessions, and it reversed on Friday where the NASDAQ was up 1.28 and the composite was basically flat. So it clawed back as far as that spread goes, but we're still seeing some weakness show up in the relationships that I've been talking about. If we look at the market grid for this week, this is the cash. We're looking for a potential of 2185, S1 2160, so S1 R2 on a daily basis. We go to a weekly chart. What we're looking for here on the market grid is an R1, which would put us at 2195, S1 2141. So there's a good possibility that we'll see this thing continue to follow through. R2 would be the extreme for the week at 2226. S1, I think, will be the low, 2141. If we did happen to get through there, then you can see the grid numbers that 2111 would be the next target. The final market that I'll cover tonight is gold. Gold had a very strong reversal on Friday. We also had a cycle hit for Friday, and we will need some follow through. A higher close today above the 1856 level will confirm a 3-day pattern, which will challenge the resistance that currently is at the 1885 level. And looking at the market grid, it does suggest we could move back toward 1898 and possibility of going to 1921, which also puts us back into that Fibonacci grid in this range that we've been trading in since July. So we're seeing a lot of consolidation here. I've been talking about gold turning bullish at some stage. This is the weekly graph, and I believe we're starting to see the PPM's bottom. We're starting to see this thing set up for a much bigger pattern. But for now, we look like we could move back toward that 1921 level. This is about a 60% probability that we'll move up to that level, which is a decent rally from here. And so from a market grid standpoint, the minimum be 1836 to 1898 will be the expected range, and with the possibility of trading to 1921. This will complete the video for tonight. Thanks for watching. We'll talk to you tomorrow.